The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to our home ownership workshop presented by CMG Home Loans and, of course, the Madison Mason Home Group. We're going to wait maybe about 3 or 4 more minutes until, give people a little bit more time to jump on. But I just wanted to welcome everyone to our seminar. We try to do these about 4 times a year, if we possibly can, just to give you some insight on what's happening in the market, as well as some of the programs or the various programs that are available. And then most importantly, making you an expert in the home ownership space, really knowing how the process goes, what you need to know, how it works, what the numbers need to look like, what do the economics need to look like in your world, so you can get really to the destination of being a homeowner. I think home ownership is like one of the biggest opportunities that really helps create wealth in the world. And a lot of people don't realize that a lot of organizations, whether hedge funds or even on Wall Street, they use real estate as a driver to really supplement 401ks, help drive pension plans and things of that nature for private sector business or public sector. So that real estate really drives the market, because people are able to really have a long, affordable life through pension funds and things of that nature, really owning a piece of real estate. So I really want to welcome everyone to this call. I'm super passionate about educating people and giving them the ability and the tools they need to really move forward and really accelerate in the world of home ownership and just being a real estate investor, or just being someone that knows about real estate. I know for me, real estate has really did a lot for me economically, socially, and just on so many levels. So real estate is just really my bread and butter and just my base of what I do, which helps drive other things. So we're going to touch on a variety of things. First, I want to give people the opportunity to come in on the call so they won't miss the opportunity, and so we don't have to kind of start back over. So I just wanted to say welcome, everyone. And Brian Sachs can welcome himself as well. He's on the webinar as well. Brian, you can
thank you. And thank you, everybody, for being here. And India, I always love and admire your passion for real estate and for really helping people up, so to speak, because yes, you're right. Hedge funds are a major player in the real estate market and even in the residential real estate market. But not only does it create wealth for you, but you and I together, India, have helped so many families over the years that actually have created generational wealth, not only for themselves, but for their children, and in many cases, even for their grandchildren. So, yes, it is what we do for a living, but it's also very, very rewarding.
Thank you for that, Brian. I'm excited about this. I mean, if you have a glass of wine, you can grab a glass of wine, a cocktail, whatever it is. If you got your feet up in the bed, this is why we choose to do our seminars in this capacity, because we don't want, we want it to be a convenient space, and we want you to be able to really sit in a comfortable position so you can get all the information that you need in the process. So we're going to start around, let's say, is it 7:10? So if you need to rush to the bathroom, get a glass of wine, get some water, calm your kids, take your dog out, we'll give you 4 more minutes and then we're going to get going. How does that sound, Brian?
Sounds great. And I just want to make sure if everybody could just type in the chat that you can see the screen and that you can hear us. So I see people still piling in, but can everybody just let us know that you can see the screen and that you can hear us? Everyone? Anyone? Okay. Yes, can see and hear. Thank you, Shannon. And I still see more people piling in here. So whenever you're ready to get going, India, we'll get this, we'll start imparting this important knowledge. And one other thing, by the way, I hope everyone can see, and I know India will mention it again as well for those that are still piling in here, but we did put all of the slides. So if you want to take notes, you have it also as a PDF. So India, whenever you're ready to get going, we'll get started. I see, Jessica, you have your hand up. If you want to put something in the chat, if you have a question, we're certainly happy to answer it before we start. Oh, good. Thank you. Jessica says she can hear and she can see. And I want to welcome, I see just a few more people still coming on. We'll get everybody a chance to get settled and we'll get started. All right, it's 7:10 by my clock. So India, whenever you're ready to go.
And it's 7:09 by mine, but it's okay. We,
Oh,
you know,
sorry. Okay.
no, it's okay. It's fine. It's fine. You know, sometimes the clocks are off, but I just don't want to hold the people who showed up on time, because I know it is Thursday and there's probably some really amazing shows coming on. So I just wanted to get started again. Welcome everyone to our home ownership workshop presented by CMG Home Loans and Madison Mason Home Group. Today, you are going to learn tons and tons of things about home ownership, how it works, the things that you should do and should not be doing in the process of purchasing a home. But the most important thing, we want you to feel comfortable with the home ownership process, because I'm a big advocate of education and really wanting people to have that resource and not just go out there and expect an agent or a lender just to give you what you want, just to really so you can understand what you need and really understand the expectations that not only that you need for yourself, but the lender and your agent, most importantly, will need from you as we set the standards so you can reach the goal that you need, and which is purchasing a home or purchasing multiple homes or vacation homes, whatever that may be. So we are going to get started. I am India Whitlock. Next slide. Of course, some of you may or may not know me. I'm India Whitlock. I've been in the business for a little bit close to 20 years. I really enjoy real estate as well as real estate development. I've been a licensed professional for about 12 years, but I've been in the industry for close to 20. I am a licensed builder. I am a mom, of course, and I enjoy helping new agents get started in their business, as well as, you know, agents that just need my help bridging gaps between certain social economic communities, or just trying to, you know, build a bridge that they miss with inside of their organization. I'm the founder and CEO and team leader of the Madison Mason Home Group, and I'm again welcoming you guys to this seminar. Next slide, please. So my team consists of some great agents, myself, the young ladies right here, who are agent partners, as well as Jessica Bias, who is a buyer's specialist. So this is our unique table of phenomenal women that you possibly have worked with before, know people that work with these ladies, or will eventually work with one of us down the road. So this is the team. And of course, every agent needs or anybody needs a great lender to work with. And Brian Sachs has definitely been a great lender to work with over the years. I've been a licensed agent. I actually met him through a client, a buyer, who used him to finance his home. And for me, when I'm looking for someone to be in business with and to really fill my bench or my table, I'm always looking for someone who is talented, who is an expert in their field, respected, and most importantly, two things. Most importantly, is a high-level communicator, doesn't give you any fluff, does not overpromise, as well as knows all the products and knows the market. And that is Brian Sachs. He is the branch manager, and he's been a loan originator for over 30 years, and he is a branch manager of CMG Home Loans. So thank you, Brian, for being a part of this this evening's workshop.
Thank you. Thank you for having me.
Sure. So here's a little bit of table content. So I want everybody to know you will get a copy of these slides for the most part, but you would need to email us and let us know, hey, India, we are interested. Could you share the slides? As well as Brian will, follow with you just to see if you had any financing questions. So if you feel like you're not, if you feel like you don't qualify now, Brian can really help you decide whether you qualify now or you qualify for 2 years, but you definitely have to stay the course in order to get to the destination that you want to possibly end up at. So today we're going to learn about 3 types of lenders, which is who is the best for you, how your budget is really important, financing, how to buy a home with less than perfect credit, costly mistakes a lot of people make when buying a home, and the one document that increases your negotiating power. So we are going to really tackle 6 steps today. So what are your real estate goals? A lot of people on this call, because they are first-time home buyers, want to own a home. First-generational homeowners are looking to invest in real estate, as well as some people just want to buy a second home or vacation home, and they want to really find the tools and the things that's necessary, or what your financials need to look like in order for you to get that second home or even an investment property. So those are our goals for this evening. So this, to me, when you're dealing on the agent side, I think this is the most important step to the buying process. You can take a screenshot of it or whatever you need, hold on to it, frame it. But I always tell clients it's important that we understand the steps in the buying process. I don't think you should hire an agent or allow an agent to take you out without you understanding the process, setting the expectations, knowing what you're going to experience, what your expectations are, and what that agent's expectations are. I really think that understanding and knowing this process is really a blueprint to make you an expert in the home buying process. So when someone tries to put some wool over your eyes, hey, that's kind of not how it goes. So I'm going to just talk to you a little bit about the buying process and how it should go for the most part, So in the beginning of the buying process, we all either find an agent on Zillow, a referral, find an agent off a sign, but you definitely need to select an agent, someone that, possibly has good reviews from you researching on social media, someone that had a friend or family member referred to you, and someone that really knows the ins and outs of not only taking you out to look at areas that you've selected, but most importantly, understanding the documentation needed to make the transaction flow perfectly. Because a lot of people don't realize when you write a contract in real estate and you put it under contract, you just can't walk away from the contract because that is a binding document. And that's when a seasoned agent comes in and really educates you on that part. The one thing about working with us at the Madison Mason Home Group, we definitely require you as a buyer to come in to do a Zoom or in-person consultation so we can really help you guide you through the process. it's like when you go to the doctors, you just don't say, hey, just operate on me. You really want to know the ins and out of the operation. Is it going to be successful? What are some pros and cons? What am I up against? So that's what we do at the Madison Makes It Home Group. We can't speak for anyone else because that's not what we do. But I think if you are looking for a seasoned agent, it's best to make sure the practices are set in stone and up front when you decide to give them a call. The second thing in the buying process is to obtain financial approval. And Brian is going to talk about that through the majority of our seminar, because that is the most important piece to the puzzle. Not just finding a house, but being able to get approved and close on the deal without any discrepancies. So he's going to talk in depth about, things that are available for you at your price point or within your credit guidelines, as well as the things that you should and should not do in the process. If you're self-employed, Brian is a great person to speak with about that, because if you're self-employed and wanting to purchase a home, there's a lot of different components that you have to make sure your accountant is really giving you great information about, because it can keep you from purchasing their dream home. So he'll talk about that in detail. So once you select an agent, or I always say hire an agent, because you don't want that, the agent doesn't want to assume that you're just going to just choose them. You want to really vet them. So after you select the agent, you obtain your financing through one of your approved lenders. Then through the consultation, we analyze your needs and your wants. And through that, when we analyze your needs and your wants based off your approval, we tell you kind of based off that price point, this is where geographically we see homes are selling for in that price range, whether it's Pikesville, Baltimore City, Baltimore County, whatever it is. We know the market that well. We can tell you off the top of our head, like, hey, in your particular price point and based off of what you want, square footage and things of that nature, this is where I ideally see that price point will set you at. Because a lot of times I know we have big dreams, but we also have to look at the bottom line of your affordability, as well as what you're approved for. Because a lot of clients will come and say, hey, I only want an $1,800 mortgage. And the lender will tell you what that $1,800 mortgage looks like. So that's when we come in and really help you decide, what are you willing to give up to get in the process. So once we decide what you're willing to give up to get, which is maybe places are your dream places and places that, hey, I wouldn't mind being there, as well as your non-negotiables, we take you out to look at properties based off a prospecting search that we give you every day, twice a day through our MLS system. And through that selection process, you as a homeowner get to select the properties that fit your price point, as well as your affordability. And affordability to me is what you want your payment to be. I feel like you never want to go in a home with nothing in your pocket. You want to have a little something. So that's why it's important to be honest with your lender as to what price point and payment you ideally feel comfortable with. Because real estate, buying a home isn't supposed to, you go in it broke and not being able to buy furniture. It's supposed to be a comfortable experience where not only are you owning something with equity, but you also feel comfortable about your payment and have the ability to do things in your home that you want to do without being strapped. So once we take you out, you select the property, myself, the agent partner, they take you out and view the property. You see the perfect home, and that home just really fits a lot of your needs and your wants. Then we would sit down with you and really talk about the property. We would do our due diligence, talk to the agent to see if there's any offers on the table. You may experience a time where there are multiple offers in this process. And multiple offers meaning not only you like the house, a lot of other people like the house. So that's when a seasoned agent will really look at the market, tell you, hey, this is what I think we should offer based off of the statistics of the homes that sold and what we think will make a strong offer. So I'm going to stop right there a bit. And if anyone has a question that they have, please put it in the chat, because I don't want to ramble on. And if you have a question that we can talk about now, so we won't forget towards the end, I'm definitely happy to answer that question. Any questions? Okay. No questions, but if something comes up, just stop me and we'll just kind of go from there. So after we take you out, we view the property, the next thing is we write the offer. We will let you know really the basics of the offer, what you're going to ask for, Contingencies, meaning your financing is contingency, meaning something that can keep you from, that needs approval in order for you to move forward. Home inspections, closing date, how much, if you need any closing help. So those are a few contingencies that you definitely, that we will consider when writing the offer. Contingencies are things that, home contingencies are things that need to get approval first before we can move forward, or where both parties have to agree in order for us to move forward. And they are, contingent on the contract. So if we can't agree on certain contingencies, then that means for you and the seller that you can basically agree that you want to really void the contract and cancel the contract because we can't agree on your inspections. Maybe for some reason your financing falls through. But we can talk about that as we get further into the home buying seminar, or even one-on-one if you don't understand what contingencies are to the contract. So once we get through writing the offer, we submit it to the agent, and then the agent will come back and decide if they're going to accept it, reject it, or counter. A lot of times we hope that they'll accept it. A lot of times we hope that at least there's a counter that we can work with, meaning the seller likes everything. However, there's a few items that they want to see if you will be willing to negotiate on. Rejected means, hey, they went for another offer, or our offer was just not meeting what they were expecting for a submission on their property. However, the goal for us is to get your offer accepted, and that's where seasoned agents come in at. So once we get your offer accepted, then that's when we start with making sure you have clear title with our title company. We do home inspections, termite, structural, mechanical, if you have a chimney. And then your lender, hopefully you would choose a bsacks, someone really great, to really help you with the financing components of it. So once we get rid of, the contingencies of Brian's calls and says, hey, Mr. and Mrs. Smith, you've been approved. Once the seller says, hey, I'm going to fix these things and we can agree on these things, or I'm going to give you a credit for these things. And if the title comes back clear, then that's when you take possession of the property and you close on it, and that property is your home. So take a screenshot of this. You can ask me any questions about these steps. I just want you to know, like, you have this as like just a pocket guide so that you can move through the buying process without feeling lost. Next slide, please. So with that being said, the person who has the money and will really allow you to get to that next point is Brian Sachs. And he's going to jump in and talk about the top 5 reasons people rent.
Okay, so thank you, Indy. And I'm just going to, before we even jump into this slide, I'm just going to tell you that, knowledge is power. And we hope to impart a lot of knowledge, but there's no way we can tell you everything, right? And so, the real goal here is to make sure that you are armed and knowledgeable and comfortable. I often speak with clients and we juggle what you qualify for, how much I can lend to you, but that's not what's really important. What's actually more important is, what are you comfortable with, and how do we bridge that gap to get you comfortable? I do see that Shannon asked a question. Does the initial meeting consult with the agent tend to cost money? Indy, I'll let you answer that.
Sorry, it was on me. Shannon, what was your question, Shannon?
So Shannon's question is, does the initial meeting or consult with the agent tend to cost money?
No, there is no cost to have a consultation.
Okay. And I'll also tell you, getting pre-qualified and pre-approved for a mortgage also doesn't cost you any money, not a penny. And there's no medical exams, or, it is a little bit of, paperwork, just a little bit, but it's not too painful. It's W-2s, pay stubs, bank statements. But again, knowledge is everything. And that's what Indy and I are hoping to impart to you. But I have to say this, everyone's situation is a little bit different. Some people may have some credit challenges. Some people may have some asset challenges. Some people may have some income challenges. So I understand and respect the fact that you may not want to ask questions here, but feel free, if you want to ask here, certainly we're happy to answer. But if you don't feel comfortable here, certainly we're happy to speak with you individually and customize a situation that works for you. So I'm going to jump in. And I just have to say this, you know, I've worked with India and her team for probably 10 years. And there isn't a better team out there, and there aren't better negotiators that really are truly the advocate for their clients. And that sometimes is a little rare to find in the real estate profession. I work with lots of teams, but India and her team really are expert at structuring the contract, negotiating that contract, and making sure that your interests as a home buyer are protected. So why do people rent? Well, I have found that there's 5 reasons. One is they're new to the area and just trying to get their bearings. And, you know, that's a perfectly reasonable situation. If you're new to town and you just want to get your bearings, totally understand that. Some people have this misconception that it's too hard to qualify for a loan. Actually, it's gotten easier and easier over the years, not harder. They don't have enough money for a down payment. So I hope you'll stay till the end here, because we're going to show you something that really is 100% unique in the marketplace, and I think you're going to love. Can't afford the mortgage payment. We're going to share some insights on that. And maybe they've had past credit issues, including a bankruptcy or a foreclosure. We can deal with that. But I'm going to tell a little story here, if you'll indulge me. You know, Indy and I had a client who came to me, I guess it's about 3-4 years ago. And he was not able to buy a house. He was a single dad with 2 sons. And he had some serious credit challenges. He also didn't really have much money. He was sort of in a tough place. And, you know, we worked with him for 3 years. He followed what we suggested. We followed up with him. We treated him with respect. And for some reason, I don't know why, people who have a credit challenge, lenders sometimes don't treat people correctly. But we worked with him. We understood his situation. And you know what? He bought a house. And India shared with me that he actually sat there at closing and cried, because he was, and this is a big guy, he wasn't a little guy, but he did that because India's team and my team took the trouble to work with him, give him guidance. Instead of saying, no, we can't help you, have a good life, we actually helped him have a good life and get himself pre-approved and get himself to the point where he could have a home for him and his 2 little boys. So that's the kind of things, you know, it just makes you feel good. But we're going to dive into all of these. I have to say that Baltimore, there was a study done, and the study covered all the cities in the United States. And they looked at the top 10 cities where it was actually cheaper to own a home than it was to rent. And Baltimore and Silver Spring, Maryland were in the top 5. Baltimore was ahead of Silver Spring. So that's very interesting. Aside from creating generational wealth and everything else we're discussing, just financially a better situation. So let's talk about some programs, and then we'll go into some mistakes and some other important topics. FHA is a program that's often used. It stands for Federal Housing Administration, part of HUD. The benefits are you can put little money down, 3.5%. Seller can help with closing costs, and that's where Indy and her team's expertise comes in. A little bit easier to qualify, and you can generally qualify for a little bit more home. The cons are the appraisal standards are a little stricter. You have to use an FHA approved lender, which of course we are. And there is what's called a mortgage insurance. That mortgage insurance is paid monthly, and a portion of it's financed in your loan. I don't want to go too deep tonight in all of these, but just want to give you some surface, knowledge of these programs. If you are a veteran, or if you've done 6 months reserves, there is no better program than the VA loan program. And it's as it should be, because these are the folks who protect us and make our country safe. So the pros of a VA loan is zero money down, very liberal with credit, very liberal with qualifying, and it can be negotiated that the lender or the seller help you with closing costs. The cons are, of course, you have to be a veteran or a veteran and a spouse. It can't be a veteran and a boyfriend, girlfriend, partner. You have to be married, veteran or veteran and spouse. There is what's called a funding fee, but if you have any VA related disability, sometimes we can waive that funding fee. They're pretty strict on the appraisal guidelines. It's a great product if you're a veteran. One of the big misconceptions is, I'll go back to that slide, but the big misconception with the VA loan is that it's like some of the other VA benefits. You use it once and you're done. It's not true with the VA loan, a mortgage, because you can use it over and over again. Conventional loans, it's an important sometimes also to hear that lingo, the language that's used. So Fannie Mae and Freddie Mac, those are conventional loans. Generally, it's 5% down. There are some programs that even allow 3% down. There is mortgage insurance. Here's a myth, that you have to put 20% down. And that's just simply not true. We can get you in with as little as 3% down. And we'll talk more about these funds later. But conventional loans do require higher credit scores, and they do generally are a little bit more restrictive in terms of the amount you qualify for. There's actually another program on here that I didn't put on the slides, but is available, and it's called a USDA loan. The benefit to a USDA loan, if any of you are looking in rural areas, so think lots of green space and trees, right? Parts of Cecil County, Harford, maybe Frederick County, parts of Carroll County, certainly not Baltimore City and certainly not Baltimore County. But if you're looking to get away from the city and go somewhere, off the grid, so to speak, there are rural properties, and the USDA loan allows you to put zero money down, pretty liberal with credit, and something we could talk about, even though I didn't include it here on the slides. So, one of the big challenges home buyers face is money for closing costs, right? Or money for down payment. And the Madison Mason Home Group and CMG Home Loans, we've partnered to provide a really cool solution. It's called Home Fund It. And you could think about it almost as a GoFundMe for closing costs. So I'll share more about it with you in a second, but let's talk about what you need to buy a home, right? So you need to think about two different buckets, if you will. One bucket is your down payment. Another bucket is your closing costs. And that myth number one there is, how much money do you need to put down? Well, you now know it's a myth, because if you're a veteran, you don't have to put any money down. If you buy a home USDA, you could put no money down. But we know now conventional and FHA is possible with 3 or 3.5%. If you don't even have the 3 or 3.5%, we're going to talk about where we can get you some of that money too, especially from the county or the state of Maryland. But what you're going to have one bucket, that's your down payment. Another bucket is what's called closing costs. And in Baltimore, the closing cost, Baltimore City, Baltimore County, you can figure closing costs are going to be somewhere in the neighborhood of 4 to 4.5%. of your purchase price. If you are a first-time buyer, meaning you've never owned a home before in Maryland, they do give you a little bit of a break on your closing costs, 0.25%, but closing costs are made up of lender charges, appraisal, credit report. Then you have title company charges. They're going to charge you for title exam, title insurance. You're going to have to put aside money for property taxes, homeowners insurance, state and local transfer taxes, and documentary stamps. And if any of you want it, reach out to me, and I'm more than happy to send you a closing cost booklet if you like. So if you don't have enough money for down payment and closing costs, what do? Well, a lot of our clients get gifts from relatives. Usually relatives are more than happy to help if they have the ability. A lender credit. You might not know that the lender can actually help you with closing costs. There are grants out there. There are city grants, state grants, county grants. The state of Maryland right now, for a first-time home buyer, we can give you up to 5% of the purchase price. Think about that. If you're buying a house for $300,000, that's $15,000 that you're getting towards your closing costs and down payment. Secured loans, seller help with closing costs. Indy and I are experts at kind of putting this all together and coming up with a situation for you. So if you don't have money, don't worry about it. We can work with you, okay? And maybe we'll work with you in putting a plan together to help you get there. A lot of times when you say secured loan, do you know who the best person you could possibly borrow from? Put it in the chat. Do you know the best person or place you could possibly borrow from? I'll give it a second here. Shannon, Jessica, Courtney, who else is here? Lisa. Who do you think? There's a lot more folks here. Rhonda, Lindsay, Lisa. Who do you think the best person you could borrow from would be? Type it in the chat. So I'm going to tell you who the best person you could borrow from. The best person you could possibly borrow from is yourself. When you have a 401k, or if you're a federal employee, you have like a TSP, thrift savings plan, you can borrow that money from your 401k, from your thrift savings plan. You're not being taxed. I'm not an accountant. India's not an accountant. We're not attorneys. We're not financial planners. But to my knowledge, as long as you're borrowing the money, not withdrawing it, but borrowing it, it's your money. So you are, in essence, paying yourself back. Think about that. But now let's talk about home funded. We at CMG partnered with the Madison Mason Home Group, and we have something called Home Funded. And what that does is we'll create a website for you, no charge. We will put that website up so all of your friends and all of your family can contribute any amount they want with no paperwork. There's no gift letters, there's no hoops, there's no hassles. It's like a GoFundMe. And at CMG, we'll give you up to $2,000 in addition to that as a gift. So this is really a big deal and a breakthrough, honestly, in our industry right now. And I hope each of you will take advantage of it. So let's move on to credit. There's a couple problems with credit, a couple issues we're going to talk about. But number one question I get is, won't running my credit score hurt my credit? Well, the truth is this, that if you apply for a bunch of credit cards or personal loans, that will hurt your credit. When a mortgage company checks your credit, it has really almost zero impact on your credit score. And you could actually have multiple mortgage companies checking your credit within like a 30 to 40 day window. And the credit bureaus understand you're not buying 5 houses. And so they treat it as one pool. but a mortgage company has to check your credit. So it's not optional. They have to. The other thing is you may think that you can't buy a home because your credit score might be low. Well, we can go as low as 580 on some programs, but the other thing we can do is tell you some tips and tricks to actually get that score up pretty quickly. I'll give you a couple tips right now. Number one, if you have collections, don't necessarily pay them off. Let's talk about it, because some you might and some we're going to tell you not to pay off. That's a big myth. The other thing is we have clients come to us all the time and they say, oh, I just ran my credit on Credit Karma. Well, that's great. But the score a mortgage company is going to run is going to be different. Well, why is that? Well, it's for a couple reasons. You need to understand that there are 3 ways credit is graded. One of those, there's a scoring model, if you will, for a credit card. There's a different formula if you're getting like a car loan or a personal loan or a bank loan. And there's another formula, the third formula, if you're applying for a mortgage. So it's not that we're right and they're wrong, or they're wrong and we're right. Credit Karma and your bank or credit card company score they give you, it's accurate, but it's accurate if you're applying for a credit card. So I hope that clears up some confusion. Another big mistake. Let me ask you, I hope everybody's not drinking too much of that wine. Type in the chat here. Let me know that you're all doing okay. But I'm going to ask you a question. Who here would give me $1,000 if I promised to never, ever give it back to you? Nobody. So I know that's a stupid question. I apologize for asking it. But that's what happens when you get out looking for a home before getting pre-approved. Let me explain. Part of the process India explained to you is that you are going to pay for an appraisal, you're going to pay for inspections, and if you don't go through with the transaction, you don't get that money back. And so it's very, very important. The first step really in the process is getting pre-approved and knowing what your comfort levels are, how much cash you're going to need, what your monthly payment is, what program we're going to work on with you. Those things are all kind of critical before you even go looking for a home. And the reason for that is so that you know what to look for and you're within the comfort levels and the zones. Looking for a home, that's a big mistake before you get pre-approved. You want to actually get pre-approved. Pre-approved versus pre-qualified means pre-approved means we actually we have verified your income, your assets, your credit. We've run you through an automated underwriting system, and we have the money sitting here waiting for you. Pre-qualified means you speak to somebody or you go online and they say, oh, well, you can go up to X. Well, that's fine, but you need to get pre-approved first, not just have a conversation. Working with an online lender, it can be challenging. Part of the problem with an online lender is they're not going to be available on the weekends or the evenings. They're not going to be able to issue you a pre-approval letter when you need one. So that's sometimes challenging. Not knowing your score, purchasing an ugly house. In my opinion, ugly is the new beautiful, and I'll go into a little bit more detail on that. But when we're doing this evening, rates have gone up. I think rates were artificially low. Just to be fair, I started in the business when rates were 17%, 17, 18, and they came down to 12 and 14, and we had a big party. So being in the sevens is not terrible, but I want to share something with you that sounds kind of, maybe it even sounds like a cliche or cheesy, but it's true. You want to right now marry the house and date the mortgage. And what that means is right now, home prices are a little low. Generally what happens is this: when rates are low, home prices skyrocket. Well, there is some talk that rates are going to go down next year. So why wouldn't you want to wait for that? The problem is if rates go down next year, home prices are going to go up. And you're going to be in a very, very more competitive situation, that you don't want to be in. That we just came off a period like that where people were waiving home inspections and offering more than the house was, listed for, and 50 buyers for every property. Right now is almost like the ideal time to do this. So marry the house, date the rate. That means buy the house now with rates as they are, so that and home prices in this range, because if they do go down next year, you can always take advantage of this program. That is a CMG program, which is called Rate Rebound. And so that means anytime 6 months to 5 years after you settle, we'll refinance you with no lender fees at all, period. Okay, so get in while the getting's good, because if rates do go down, home prices are going to shoot up. I want you to also know, we talked about ugly, right? There are programs out there. There's a lot of homes out there, especially in the Baltimore market, where there's a older home supply. A lot of the homes in Baltimore City, Baltimore County, they're in good shape. They're excellent homes. They just need a little bit of love. They might need a little bit of updating. Maybe it's got ugly paint, ugly carpet. Maybe you need to take down some walls, update the kitchen, whatever. There are programs, and we are the national #1 company in the country to do renovation loans. And we will actually lend you the money to buy the home and do all the renovations. I'm settling one tomorrow, actually. It's interesting. So this is the sellers are getting divorced. The seller husband, seller wife, neither of them really took particularly good care of this property. We have the buyer who's settling tomorrow. He bought the house for $220,000. He's putting in $50,000 of renovations. We're lending it to him, right? And so he's in for $270,000. We have all the list of the repairs he's going to do, down to the nails that are going to be used. And the appraiser has told us that once this home is renovated, it will be worth $375,000. So again, he's going to be renovating it. That means he gets to choose the carpet, he gets or flooring, he gets to choose the paint, he gets to update the kitchen, he gets to finish the basement, he gets to do all sorts of things. But he bought it. He's in for $270,000, and that house will be worth $375,000. He has over, aside from customizing it to his likes and tastes, he's going to have $100,000 in equity. So that's a phenomenal program. Don't be afraid of ugly houses, okay? The other thing, and again, I'm not an accountant. India's not. I don't think you're an accountant. Are you, India?
No.
Okay. So neither of us are accountants. Neither of us are attorneys, but I'm going to share something with you. We have a lot of clients that come to us and they say, I can afford $1,600 a month, but I can't afford this house because it's going to be $2,000 a month. And the first thing I generally ask is, are you getting a tax refund? And usually they are, and sometimes they're getting $4,000 or $5,000 back as a tax refund. Well, when you buy a home, the interest on your mortgage could be tax deductible, and the property taxes could be tax deductible. But if you are getting a tax refund, why not get that money back every month in your paycheck? Sit with your preparer and fill out what's called a W-4 form, and try to get that money. It's your money. The government's not paying you interest on the money. And in fact, whatever you get back from the state of Maryland as a refund, you're getting taxed on. So check that out with your tax preparer. But I'm going to share something with you now also that I think will knock your socks off. How would you like to have a property and have someone else make your mortgage payment and have a side hustle income at the same time? So check this out, okay? You could buy a multi-family property, which is up to 4 units. You could go VA or FHA. If you're a veteran, you could do it with no money down. If you are FHA, you could do it with 3.5% down as long as you're going to live in one of the units. But think about this. Those 3 other units could be throwing off enough money every month to not only cover your mortgage payment, but also create a really cool side hustle income. And, talk about generational wealth. Think about that. You being able to live rent-free, mortgage-free, and have a side income. I mean, it's enormous. Plus, you're going to get an extra tax write-off because those other 3 units are treated like investment properties. So if that's something you're interested in, let me know. Let India know. But I mean, here's an example. I actually just wrote this book. It's available on Amazon, or you can go to the realestateloophole.com. But think about this. It's a 300,000 4-unit building. I can't tell you how many people India and I have exposed to this that, are now just can't thank us enough because it's a life changer, right? But let's say the mortgage payment's $2,400. You live in one of the units, right? And you rent out unit 2 for $1,500, unit 3 for $1,500, and unit 4 is a small 1-bedroom. You rent it for $1,000. Think about this. You're getting $3,500. That covers your mortgage payment, right? And it gives you another $1,100 a month in income without a part-time job. Yes, you have to collect rent. Yes, if something breaks, you have to fix it. But, that's why I wrote this book, The Real Estate Loophole, because people just aren't exposed to this. So, India, I'm going to turn it back over to you.
Yes, thank you guys. So did you have any questions? I know we went through a lot thus far, and I know you can't cover everything in an hour. However, we definitely wanted, just to ask you if you had any questions that you wanted myself or Brian to answer. The next big thing right now is, what do you do now? Especially if you want to entertain the home funded webinar product, and just, view the home funded webinar. That product, I think, would be good because, I think crowdfunding, I know we do GoFundMes and things of that nature, but what better way to do it and help people reach their dreams or build. We always talk about building generational wealth. How come we can't help build generational wealth through this home funded program? You can give it, use it as a wedding gift in lieu of gifts, a birthday gift in lieu of, gifts. So you can do this home funded in lieu of a lot, because prior to this program, having gift funds, it had to be sourced from a family member, and they had to show proof that they had the money. So you couldn't just take your money if you had it under the mattress, deposit into their account, and then them use a bank statement to show that they had to show that the money has been in their account for over 30 days or maybe more to even see if you even qualify to use their money as gift funds. So this program, I really like it a lot because it gives us the opportunity to be, have a GoFundMe and build generational wealth while, in lieu of accepting gifts. We want people, hey, I'm getting married, but I want to buy a home. And this is, as opposed to me asking you for help, this is a way for you to take your gift and just dump it into my funded app. So Brian, can you tell them a little bit about the funded, like say for instance, if they decide, where does the money go if they decide I don't want to buy a home at this time?
Well, the money would go back to them. All the questions, honestly, are here. You can have them. You can ask us a question. You see right here. Everybody seeing the screen? India, are you seeing it?
Yes.
Okay. So here's what you want to do. You want to go to homefunded.com/realtor/India Whitlock. You might want to just take a screenshot of this. We also have someone right on the page, as you can see, that will answer questions. But it also, it goes even deeper. You get some incentives when people shop at certain places. You're going to get some money. So we've done everything we can to make it simple. there's a lot of paperwork involved in gifting. And this requires zero paperwork. If somebody wants to give you 50 or 5,000, they can. You know, I could talk about this program honestly for an hour, but sign up and we'll walk you through whatever questions you have. India will and I will, but just know that there's no other company out there on the planet that has this product, and India is bringing it to us to NCMG really to make it painless and simple.
And it's no cost, so I don't want you to.
Oh, there's no cost. We do all the lifting, 100%. There's no technical skills. It doesn't cost you 10 cents, and you're going to get up to another 2,000 that we're going to match. So, honestly, no reason not to do it.
Exactly.
So go ahead, India. I'm going to minimize this, but again, take a screenshot, homefundit.com/realtor/India Whitlock.
So this is kind of what you took a screenshot, but this is how you sign up for a free account, set up your profile, share with friends and family, transfer funds to your bank account, and buy your new home.
Absolutely.
So here's our information. Before we go, again, we're going to ask, does anyone have any questions that they would like to ask that's been burning in their mind? I would, definitely advise people, like if you're looking to buy a home, try to keep your conversations to minimum, because sometimes friends and family will discourage you from reaching your dreams because possibly they never reach theirs. So definitely, minimize what you're doing and keep the conversations at a minimum, because somebody can really talk you out of the things that you desire, the things that you deserve. And a lot of times that is buying a home. So I would definitely try to be a little bit. So I definitely want to see if anyone has any questions. We'll give you a few seconds to write it, because I know sometimes writing questions can, take a while, especially if it's a couple sentences.
Yeah, again, I'm going to tell you, screenshot this, and India and I are always happy to speak with you. There's no cost. There's not even an obligation. Everybody's situation is a little different. And, what you said, India, was really interesting. Some people are jealous and they don't necessarily, they have issues. But I'll tell you the other thing. People will tell you, they will give you advice. Let's say they're saying it with a good heart and they mean well and they really do want to help you, right? But they're giving you advice and their situation may be completely different than your situation, right? They may be saying, why don't you do this? Or I did that. Well, and that's great. And it might have been the right situation for them, but it may or may not be the right situation for you. And that's why India and I are so dedicated to providing you with knowledge and guiding you so that you have the information to make intelligent decisions. I always say, I say something kind of silly maybe, but it's true. If I broke my toe, I'm not going to my dentist to fix it, although they're both doctors, right? So it's the same thing. Your friends may mean well, but unless they're a realtor or in the mortgage business, you might want to just take their, advice, even though they mean well, take it with a grain of salt. So all I see are some thank you. So with that, I think we'll wrap it up. I thank you all for being here. India, any
thank you so much. I hope this was helpful. Thank you for attending. Thank you for showing up. I always feel like the people that show up in those small, powerful groups are the people that really want it the most. So thank you so much for attending this informational session, and I hope to see you and hear from you soon.